Hello and welcome to Investing Confidential. It's Wednesday, the 29th, and markets look like they really are going to roll over here. I mean, taking on the chin. You've had all this good news with Nvidia and all this, and yet market can't hold. And this is a sign that people are finally capitulating on these ridiculous rate cuts. Even Goldman Sachs, the biggest hog in terms of their relationship with the White House, the government, the stock market. I mean, they're just a joke, and they've capitulated on July rate cut. They're still looking for two rate cuts, but I don't think anyone who is really independent believes there's going to be a rate cut this year. Rates are going up, inflation is going up, or at least staying sticky, and it's just ridiculous. So first article here, real quick. I mean, I saw this today. I thought it was really interesting. So we knew this was going to happen. BlackRock now is the largest spot Bitcoin ETF. Grayscale was obviously the one that was the legacy one. BlackRock's taking over crypto and Bitcoin. They have a bunch of ETFs. They're back of everything. They want to control it. Okay. And that's because the government wants to control it. So BlackRock is an arm of the government. Not that they take the government, but they're involved, right? Because anytime there's a profit, they don't care. Okay, so they have trillions under management. They're going to get bigger and bigger because that's what they do. It's all about AUM. It's not about making people any money. If you have any money in BlackRock funds, good luck to you. But as they continue to control and get a larger percentage of the Bitcoin business outstanding, Bitcoin is going to become less and less attractive. Okay, the essence of Bitcoin that was started after the financial crisis was not to be controlled by BlackRock. That's the antithesis of what Bitcoin is all about. So all you Bitcoin people, just be aware that when BlackRock takes control, it's not good. Okay. A couple, some more stuff here. Very interesting. Talked about here, Chinese companies that are not allowed to do business in the U.S. What are they doing? Very simple. They're going through Mexico. Okay. So even BYD, which is not blacklisted, is going through Mexico, going through Canada. So Chinese companies, they're not dumb. They've been doing this for a long time. It's the U.S. government who's a bunch of morons to think they can stop. The problem is the demand for cheap products, okay, the Walmart, the Targets, these type of thing, and to keep inflation down, there's going to be demand for these products, and they're going to get into the country some way, some shape. They're going to get in. So you can ban all the Chinese companies you want. You're not going to stop the products coming in, but they are going to be more expensive. And China is now importing inflation as opposed to importing deflation, which they did for 30, 40 years. Just interesting anecdote here. Mexico has an election on June 1st. They're about to elect the first female and Jewish president. I saw a great documentary on her. She is socialist, obviously, but well-educated, and I think is going to be a big step up and a refreshment from the current president, who's really just an old socialist who really just didn't want to do anything. I mean, his biggest accomplishment during his term was he did nothing except stop a new airport being built in Mexico City. But I think hopefully Claudia Sheinbaum is her name, is going to do something with this violence in the country, which obviously stems from the cartels. But in terms of business, in terms of opening, drawing investment in Mexico, I think she's going to do a great job. Mexico, I think I put a video out on Mexico not too long ago. You can look it up. I think Mexico is a great investment theme. Wouldn't buy it today, but focus on the fibras. In fact, I think Mexico, of all the international markets, is the easiest one to buy. You could buy it through Charles Schwab, Fidelity, any of the brokerage accounts. You can buy directly into the Mexican market, local Mexican stocks, and focus on FIBRAs. FIBRAs are real estate companies that either are developing warehousing, manufacturing facilities all along the border. That's going to continue to boom. Okay. And it's a related article because right up here, we've seen the blacklisted companies in China. They're going through Mexico, and there's nothing anyone's going to do about it. Okay. So there's an interesting theme here. So the next thing here, I mean, this is something that probably most people would just pass through. So in South Africa, you're going to have a huge shift in politics as Mandela's old party, the African National Congress, is going to be out, and there's going to be some new blood. I mean, anything is going to be better than the current government, hoping that this will do something in South Africa. If it does, the South African market has been an underperformer and is incredibly cheap. There are ETFs to buy South Africa, so I would pay attention to this because it's going to be a big opportunity to buy South Africa if we get a new government going in the right direction, and not obviously what we've had over the last few years, which has really just been almost terrorism in the country. So now we have here, we talked about BYD. We talked about yesterday the EV scam that's been going on in this country, other than Tesla, just a total scam by the U.S. government trying to push this ridiculous climate and EV related agenda on everyone. EVs are fun vehicles. They're not a solution, okay, yet. But here is a solution, okay? BYD, this has been out for about a month or so. I mean, they're putting all their money down, not on EVs, but on hybrids, okay? And this hybrid, by the way, that they're going to will probably be built in Mexico along with their new SUV. And along with Toyota, they are the leaders in the hybrid technology. And if this is true and we get to a 1,300-mile driving range on one fill up a tank of gas on a hybrid vehicle, this is a game changer, folks. An absolute game changer. And forget about EVs. This is the game changer. Okay, it's going to take EVs, I don't know, 7 years plus to get to this kind of range. But the difference is you don't have to charge it. It charges on this is a hybrid, okay? Some of them are plug-in, but at the end of the day, you just put some gas in and you just go. Okay? It says you could drive to New York or Miami while filling up a tank of gas. It's unbelievable. This is a game changer, very negative for EVs, most likely very negative in the short term for Tesla as well. Just be aware of that. Okay, now we've got just a couple of big merger stuff out here on this article. The ConocoPhillips, which is at the lower bottom here, I was going to buy Marathon Oil. We've got Hess being bought out by Chevron. You're seeing here Anglo American, the two big mining giants were going to merge. That's broken off for now. Okay? I think that's going to happen. That's going to happen eventually. Why are all these huge companies merging? It's very simple. They realize that as the bigger they get, the harder it is for governments to interfere with their business. Okay, the bigger they get, they become too big to fail. So independently, the governments can attack them, but as they get bigger and bigger, they can squeeze out more profit and prevent the governments from impinging on their business, which unfortunately is the case. But at the end of the day, folks, this is inflationary. Okay. When a small number of companies control the oil market, when a small number of companies control all the minerals and mining, they can raise prices. Again, inflationary. Couple that with a weakening dollar, which we're going to have, it's going to have a big impact on this economy, because the White House is not going to be able to do what they want to do and lower rates. And whoever wins the election in November is also going to have a tough time lowering rates. Okay, and then here talk about inflation. There's a problem in Brazil, folks, in terms of the orange crop. So people want to talk. They talked about here, well, alternative fruits. No, you can't substitute oranges, and the price of orange is going up again, inflationary. So as much as these manipulators on Wall Street and the elites, the government elites want to lower rates, they're not going to be able to. They're not going to be able to. Okay, and here, I mean, again, as you guys know, I'm not a big fan of Wall Street. Okay, and basically, what this article is saying here is that as much as the big Wall Street banks want to walk around and show how powerful they are, their business model is dead or dying. Okay, their business model of charging commissions and doing IPOs, that business model is dead. They're becoming niche players, and who's taking their place? The asset managers are dictating everything. Okay, so again, more bad news for Wall Street, and I'm not, and I don't really care. And so here again, sorry for putting the same article again on the orange juice, but here I want to talk about here the vol. Other than today, which we had a big move downward, but the vol's been so low that what vol means, what when you look at volatility calculated in the market, it's so low that people are just basically saying there's no risk. And we all know there's risk in the stock market. So when everyone prices in zero risk, it's time to be worried. And at the bottom, again, another example of this. This little article talks about, and this is in the Financial Times, by the way, there's nobody short. Okay, and here's a chart to show. There's just nobody short. Hedge funds, okay, which I worked for many, many years, always had big short books. Nobody short stocks, okay, and that means there's a big whoosh under the market. When you have a lot of people short, it usually they cover to profit, and that usually gives them. But there's nobody short, so everyone's under pricing risk, including the professionals, supposed professionals. Here, interesting article. The Cleveland Fed. Again, this is Wall Street and the government. Goldman Sachs, as I told you before, Goldman Sachs is in lockstep with the government and Wall Street. They're going to appoint a banker as the next Fed president. And guess what? Eventually, you're going to see another Goldman Sachs guy running the Fed, and he's going to run the Fed. I guess that's good for people who are bullish all the time, but I don't think it's good to have ex-Goldman Sachs people involved in the Fed. I'm sorry. On here, I mentioned again, ConocoPhillips, Marathon Oil, big merger deal. Again, this, all the newspapers are talking about this. This is big. This is a big deal, and it's inflationary. Okay, so this is today's news. Okay, so we had in the last couple of days, we've had Treasury auctions, and there's no interest, folks. Foreigners are not participating. The interest in these bond auctions are very limited, and they're getting done because the Treasury is calling in some favors by the big banks. But at the end of the day, we're seeing yields go up, not because it's inflation data, but because we can't get people to buy our Treasuries. I've shown this before. Okay, I've shown this before about the amount of interest that this country's paying on its debt. It is a disgrace. It's a disgrace. And it's because we've spent trillions upon trillions of dollars since COVID, even prior to COVID, trillions and trillions on a never-ending war in Iraq. And now it's coming home. The things are coming home to roost. Okay, we can't even sell Treasury. And by the way, and this is going to get worse. It's not going to get any better. It's going to get worse. Okay. And then coming down to the wire here, I mean, look, the powers that be will tell you everyone's locked in at 3%, 2% mortgage rates, right? That's not true. That's not true. Okay. A lot of people that bought during COVID didn't lock in 30 years. They locked in 10-year, 5-year arms, whatever. And there are going to be problems here. Okay, I don't know what percentage it is, but there's going to be a problem. And what's this going to do? It's going to force people to sell. Okay, because if you bought early enough during COVID, you got a big profit, supposedly. And more supply is going to come onto the market. This is good for people who have patience, okay, but not good for people who want to sell because there's no bids. Okay, there are high prices and no bids. So just be aware that we're going to see a real estate market finally start to hear some pressure. And finally, I just want to say that the action in the markets the last few days is definitely something to worry about. Nvidia earnings came out very bullish, market was down. Nvidia up, Apple up today, market down. Again, Magnificent Seven. I don't even know if it's a Magnificent Seven anymore. I think I said Magnificent Three. It's getting the breadth of the market's getting worse and worse. And so I don't know how long it's going to take, but higher rates, the market's sinking in now that we're going to have higher rates for longer. It's going to affect corporate earnings, probably is already. But again, these companies are very good at manipulating their earnings, very, very good at it. The dollar will begin to weaken. It's already starting to weaken. Commodity rates higher, inflation higher. So until we speak again, investors, be careful out there.